Thank you, Mr. Charan Singh, and thank you to Policy Circle for giving us the opportunity to deliberate again and again and again on this issue. Also, I was trying to frame my thoughts. I did prepare certain notes, but you very well opened the discussion with the comprehensive understanding and the need, both on the climate risk side, as well as on the opportunity to raise the resources and where do you find that capital. Mr. Rashmi has been now, I mean, we have looked at his work and he has really been extremely instrumental in shaping some of our ideas, both at the negotiating table as well as within the Indian ecosystem. And you mentioned something, Mr. Rashmi, that climate within the broader framework of environment has become an urgent need to address, both in terms of finance and in terms of other policies. As you say that, and I completely agree that it is the urgent need to address that, it must also be put on the table that our broader environmental concerns should not get edged out, because I think not everything is covered by climate. It is absolutely important. We talked about biodiversity in the previous session. And while we proceed forward to on our mitigation and adaptation trajectory, we also have to take into account that our other environmental concerns, whether they're pollution, land degradation, biodiversity concerns, water and ecosystems, they do not get compromised. At the same time, while we do this and we'll find the resources to do this somehow, we need to see that all of this bears the stamp of equity when we actually make this transition. This transition basically means a structural transformation of our economic production and consumption patterns. And today, when you were saying, you basically alluded very eloquently to the fact that probably international financial architecture is failing us in trying to get us the funds that we need at the time that we need urgently. So first thing that comes to my mind is that science that you talked about and the political will that is required need to come together if we have to check climate breakdown. Second, climate transition and development transition for a large economy like India are happening simultaneously. So it is extremely important for us that these two transitions do not compete with each other, but actually become supportive of each other. And why I talk about this in the context of finance is extremely important, because what you end up spending on will be determined by the choices that you're trying to make in terms of your development and climate transition at the same time. Now, before, I mean, the focus of my talk will remain mainly on resource raising. You know, where will that money come from? What are the opportunities? While opening this discussion by saying that we will need all kinds of resources, grant capital, concessional capital, commercial capital, from all kinds of, sources as well, whether that's domestic banks, whether they're international sources of finance. We'll need all of that. I mean, the need is so huge, the gap is so huge. But before I jump into that, on climate risk, like you mentioned, Mr. Charan Singh, that regulators, they're definitely taking a rather proactive steps. What we hear from the banks, which you also mentioned, is they also need some kind of guidance in terms of understanding how they're going to do all of this. So I think from July last year, when the Reserve Bank of India produced the discussion paper, which basically stressed on the point of integrating climate risks into the risk management systems of banks, as well as to be able to disclose this. And climate risk disclosure is a different kind of disclosure from ESG disclosure, because it is based on future scenarios. And therein lies the problem of science, the problem of modeling, the problem of data. And I think all of that will become clear when Reserve Bank of India in shorter in term actually comes out with the guidance and how banks are supposed to go ahead with it. Now, jumping quickly back to the resources availability and where the opportunity lies, I will leave more difficult parts of the question to be, elaborated by Suranjali, but I will try to tell you 2 or 3 things. You mentioned about green bonds, and I think therein lies a huge opportunity. Not only for corporates, by the way, where actual shift in their capital expenditure should start to happen, but also within the financial sector, because banks will need to be able to raise their resources. And so this universe is growing, and we know that from any kind of data and numbers globally right now, the thematic debt capital, right now I'm talking to the capital markets sources, because that's also important. While our economy is hugely bank financed, the kind of investment that is required to transform energy systems, or any climate investment for that matter, they require a large amount of upfront investment. They require a longer duration, longer tenure. So the payback in certain cases may not be very immediate. So all of that requires or makes debt capital markets more amenable to this kind of investment. Bank lending, which is important and will remain a majority source of finance for the Indian economy and Indian corporate and even MSMEs, will also start hitting their own sectoral limits. So even they need to actually tap the capital markets, both Indian and foreign, to be able to raise these resources, to be able to on lend. So where do these numbers, how do the numbers sort of stacking up for India? Globally, there's about $3.7 trillion of thematic debt. Not only green bonds. Green bonds are basically the majority part of that, around $2.7, $2.8 trillion, but also all other kind of thematic debt, also ESG debt, sustainability linked bonds, loans. So all of that universe is here, which is growing extremely fast. Whereas India, it's nearly $30 billion as of March 2023. Okay, who are the entities which are investing, and which are the sectors? Most of it has been sort of a mirror of the international market. It is the renewable energy companies, which are large companies which can actually tap the international market on the strength of their own balance sheets. So these are the likes of the Renew, etc., but also financial companies. We heard that SBI had raised $3 billion of green bonds, actually. And there are more banks. But in the last couple of years, the banking sector hasn't really tapped into this market as much as they were initially doing. So there has to, some work needs to be done over there. Mr. Rashmi, you mentioned that, how can we, where do we get these resources from, and what are the main barriers? And those barriers, as you said, cost of capital remains a huge barrier to be tackled. Then the other barrier is actually a pipeline of investments, of bankable projects, right? And so there are 2 challenges over here. One is the bankability of projects. Second is a visible pipeline, because that visible pipeline is also necessary for predictability, for plan, for investors to know that, okay, something more is coming and there is a clear sort of a plan, right? And third is, of course, that many of these investments, majority of these investments, do not yet have or basically have low risk adjusted returns. So now you have financiers who want to invest, And here the main demand is from international investors, institutional investors, who are looking for these pipelines and projects, and we are not able to provide that. The Indian market, the Indian institutional investors and banks, we used to think that, there is absolutely no appreciation of these kind of projects domestically amongst financiers and lenders. This is not so. This has been substantially, this myth has been substantially busted by the very successful sovereign green issuance, where it was oversubscribed, where the domestic investors, they formed a large part, of course, they invested into it, but also international investors, for whom right now the higher interest rates, local currency, all of that posed a barrier, invested in our sovereign green bond. So we have to that is a signal that the local green bond market or local thematic bond market can grow, has a potential to grow, has shown the appetite to grow, and we again will come back to a very sort of systematic regulatory support and incentives for that to grow, so that these projects can get into the pipeline. And also, you mentioned about the currency mismatch between, when you're basically raising your resources from international markets. It is very important that we grow the domestic market, but we do have big lacuna over here. There is no dedicated pool of capital, green capital, etc. So I think a lot of entities within the regulatory and policy apparatus are looking at these things, but what we really need at this current moment is a much more visible roadmap. What we have with us is a whole lot of excellent models, but not somehow coming together in a strategy. And I think that sustainable investment strategy is very much an important aspect. And now I will just conclude by saying two things. That while MDBs are sort of spectacularly failing at providing us a direction, I think there is an underappreciated entities within the domestic financial architecture, which are national development banks, which are national DFIs. There are 5 of them that we have in India. The newest one is the National Bank for Development of Infrastructure, NABFID. We have NABARD, we have SIDBI, we have EXIM, and we have National Housing Board. Each one of them has the potential to get repurposed. NABFID definitely has come into being with the stated objective also to put ESG and climate into its lending and investment criteria. And these are extremely important. SIDBI is doing phenomenal work, which I think in so many ways can be adopted by the commercial banks. It's been there forever, really, really doing phenomenal work. NABARD, which has around 380 different kinds of activities, which can already be called green or resilient, needs to sort of get that tool or that mechanism where it can look at its loan book in an easier way and actually get into the market. It's the biggest refinancing agency in the domestic market. So NDBs will be very, very important. International funds, concessional funds where we draw from, for example, Green Climate Fund, which is an important one. There are about 11 national development banks that it has given its funding to. Now I will pronounce the most difficult to pronounce word, accredited agencies. Okay, NABARD is one of them. But do you know 90% of the resources that GCF has goes to MDBs, not directly to the national development banks or DFIs, where they will be better realized in terms of much more direct deployment. In India, I think you are better positioned to probably comment on that, Mr. Rashmi, but it's less than half a dozen of projects that GCF has been able to fund. less than around probably maximum and especially also not only mitigation, adaptation is even less. Adaptation, I think, just around comes to around of $400 million of all different kinds of funds available, right? So we have to really tackle and ask these questions very, very in a focused manner to get the chain of finance moving. And I would say that market is also expecting those kind of signals from regulatory apparatus, from policy. So we do need very clear policy signals. We need sectoral transition pathways to be defined. You talked of taxonomy. That is something that we are all awaiting for a release from the Ministry of Finance. I will conclude my opening remarks here.